All right, back for another short live stream show. So, less than 10 days ago, Bloomberg Intelligence, Bloomberg News reported on July 6th that China was imposing checks on large transactions after bank runs. So, China imposed a program to keep large transactions in check amid heightened concerns over the state of its financial system as bad debt balloons in the wake of the global pandemic. The People's Bank of China this month kicked off a pilot plan in Hebei province that would require retail and business clients to pre-report any large withdrawals or deposits. According to a statement, the 2-year program will be expanded to Zhejiang and Shenzhen in October, encompassing more than 70 million people. Chinese lenders are facing a surge in bad debt, with the economy set to expand at the slowest pace in 4 decades. Authorities stepped in last month to halt bank runs at 2 local lenders in Hebei and Shaanxi. That comes on top of an already shaky situation last year, which saw China bail out and seize several struggling banks. For those of you who are new to my channel, I was covering this extensively last year. It started around early May 2019 with Baoshan Bank, then Bank of Jinzhou, and then Hongfeng Bank, and there was a couple others, maybe 4 or 5 other ones that were public, and the rest were absorbed by either larger banks, state-owned enterprise banks. There was all types of bailouts. I've done a lot of videos on it in the last year with screenshots from news stories. So the bank runs actually did not accelerate through a lot of 2019. After about 4 or 5 months, they kind of calmed down, and here we are again a little over a year later. The pilot program, I'll talk about the bank runs that are starting, as you can see there on your screen. Kyle Bass even sent out 5 tweets today, including the Bloomberg article that you can see there on your screen. Let me just lead up to it, though, first with about 10 days ago, because my hedge fund contacts that follow China were warning that they were trying to ring fence a lot of dollars in the Chinese banking system. Chinese lenders are facing a surge in bad debt, with the economy set to expand at the slowest pace in 4 decades. Authorities stepped in last month to halt bank runs at 2 local lenders in Hebei and Shaanxi. Comes on top of an already shaky situation last year, which saw China bail out and seize several struggling banks. The pilot program aims to tighten monitoring of unreasonable demands of large amounts of cash to keep systematic risks in check. The People's Bank of China, or PBOC, said in the statement, regulators will protect the public's normal need for large transactions. Also, what was mentioned here, and my hedge fund contacts were talking about this, is that there's a real concerted effort to keep dollars, US dollars, inside the Chinese banking system and inside the Chinese economy to prevent them from leaving. So the rest of this article will be below the video in the information and description section. So people were warning, the contacts I pay attention to that follow China closely were warning about this 10 days ago, that things were getting a lot worse, starting to get a lot worse again. Kyle Bass tweeted today, you have the first tweet you can see there, that China's bank runs have begun again at precisely the time when Chinese banks need any and all cash flow to pay for severe loan losses. The State Council demands 1.5 trillion in RMB, or 75% of the 2019 bank profits from banks, to help the economy. This enormous grabbing of what some are supposed to be independent publicly traded companies in China is exactly what any fiduciary should have legal problems with in the future. How does one invest in a bank stock where the regime can take profits away, quote, for the good of China? Same thing with a lot of these Chinese technology companies. And they defraud American investors with phony accounting. These bank runs are happening for logical reasons. Number one, many rural Chinese banks are insolvent and begging Beijing for bailout money. I'll add bailout in there. Number 2, Chinese regulator is warning of sharp rise in bad loans and capital shortages. Number 3, regulator is limiting withdrawals of large amounts, adding panic. Number 4, interbank lenders got crushed in Baoshan Bank's collapse. So this was May 2019, and there was a number of really in-depth articles about the interbank lending markets in China going crazy for a couple months. I think May, June, and maybe part of July in 2019. So rural interbank funding is increasingly difficult to arrange. In the end, the only quote-unquote safe banks in China are the big state-owned enterprise banks and the policy banks. The rest of the system, according to Kyle Bass, will be playing whack-a-hole for years to come. And then Kyle also put the link to the Bloomberg article that you can see there on your screen from July 15th, a spate of bank runs breaks out in China fueled by social media. Social media fueled rumors about banks collapsing are popping up at an unprecedented frequency in China, forcing regulators and even the police to step in to calm depositors. Just since the past month, worried savers have descended on 3 banks to withdraw funds amid rumors of cash shortages that were later dismissed as false. Of course, because spreading malicious rumors in China is a punishable criminal offense. Over the weekend, especially with the doctor who was trying to warn people about the coronavirus, over the weekend, customers rushed to a bank in the northern Hebei province to take out money, prompting local regulators to publicly vouch for the soundness of its lenders as the police so the police stopped the bank run. Confidence in the 43 trillion banking system. The banking system in China is insanely large. 43 trillion. $43 trillion, not Chinese yuan. The $43 trillion banking system in China is eroding among the nation's more than 1 billion account holders, threatening a cornerstone of China's rise into an economic powerhouse. After several bailouts and the first bank seizure in more than 2 decades last year, which was Baoshang Bank, and then it progressively got to larger and larger banks, and the sovereign wealth funds stepped in, and the state-owned enterprise, the sovereign wealth funds were ordered to step in, and the larger Chinese state-owned enterprise banks were ordered to step in and bail out the smaller banks. Several bailouts, first bank seizure more than 2 decades last year, the global pandemic and its economic fallout have exacerbated an already shaky situation in the world's largest banking system. Quote, the perception Chinese savers had of banks being risk-free is changing, even though in nearly all recent cases their deposits have been protected. I would argue with that because a lot of Chinese families do not think banks are safe. More educated, more fluent Chinese in the mainland, they tend to not trust Chinese banks, and they tend to view real estate investments more as safe and basically investing in a bank. So Chinese families invest in a lot of real estate in mainland China properties and also outside of China, and real estate is viewed, also precious metal, is viewed as safer, as having bank-like characteristics and being safer than Chinese banks. But this article didn't cover that. That's from talking with contacts and people who have lived in China. The perception Chinese savers had of banks being risk-free is changing, even though in nearly all recent cases their deposits have been protected, said Zhang Shuai. I'm going to script this last name. Shuai, a Shanghai-based analyst at China International Capital Corp. Quote, once a rumor like this spreads, it brings immediate liquidity risk to a bank. For decades, deposit taking has provided a stable and low-cost funding base for China's financial market, playing a key part in the rise of the economy to the second largest in the world. Chinese households hold about $90 trillion or $13 trillion of bank deposits, more than anywhere else in the world. Regulators are now not only seeking to soothe nerves publicly, but are also raising the protection to preserve this cushion for banks. The run in Hebei came after authorities kicked off a pilot program to limit large transactions in the province. So Kyle Bass has also talked about this, and he won't name the large publicly traded company, but there's a lot of American and European companies that cannot get cash, especially US dollars, out of the Chinese economy and Chinese banking system. And Kyle Bass has said one of the large publicly traded companies, my educated guess is it's Apple, can't get at least $10 billion of their cash out of China. So they've ring-fenced a lot of dollars inside China. Limiting transactions in the province, the 2-year program, which is set to be expanded to Zhejiang and Shenzhen in October to encompass 70 million people. Also, China, if you pay attention to the news headlines, China is rolling out, they're testing their crypto yuan at their Uber-like company, which I think is Didi, their car pickup company, and then also their new grocery store delivery, the grocery delivery. They're testing their crypto yuan with those. That's what they announced recently, I think in the last 10 days. Encompass 70 million people, would require retail clients to pre-report any large withdrawals or deposits of 100,000 yuan or $14,000 to 300,000 yuan. The China Banking and Insurance Regulatory Commission on Saturday again warned that lenders are facing a surge in bad debt as the economy sputters at its slowest pace in 4 decades. You can see there on your screen the non-performing loans. That's the blue line. It's taking off. So China, it says China NPL total, and it's going at a much higher, steeper angle over the last couple years. And we don't have the 2020 numbers, but I'm guessing the 2020 numbers are going to be really bad. China, okay, whilst trying to figure out where I left off. While stopgap measures, which have included rolling over debt and delaying loan payments, have limited an immediate surge in bad debt, the regulator said the fundamental issues of poorly managed banks and the deteriorating ability of companies and individuals to repay loans are still far from solved. This has to do with the cash flow problem in the global economy. So Chinese manufacturers are not selling nearly as many goods. They're not bringing as many dollars back to China, and they're not reinvesting those dollars into U.S. treasuries or other things. It looks like they are stockpiling commodities though, at least for a while, because we've had a really big rally in the copper price. I think since around March 23rd, when the copper price got down to about $2.08 a pound. It was, the last time I looked at the copper price, $2.80 a pound. So it's been an enormous rally, but that could just be stockpiling. And if the global economy rolls over, if the Chinese economy has problems, I could easily see the copper price starting to have big problems again soon. Okay, back to the article. The regulator said the fundamental issues of poorly managed banks, deteriorating ability of companies and individuals to repay loans are still far from solved. They're also asking banks to forego 1.5 trillion yuan in profit this year by offering lower lending rates, cutting fees, deferring loan repayments, and granting more unsecured loans to small businesses to help the economy. So also in the last, I want to say 6 weeks, the People's Bank of China has issued a number of statements, and they've said they are willing to provide large amounts of emergency liquidity, but they will only be short term, and that they want to pull out. And this is very similar to what the Federal Reserve did in 2008-9 with the many trillions in currency swaps, trying to save the system. The People's Bank of China said they are willing to provide large amounts of emergency liquidity measures, but that they want to pull them out as quickly as possible. So they want to put it in, prevent banks from failing or companies from failing, large companies, and then maybe try to pull it out in 6 months or a year and not keep it in the system, because the longer they keep that liquidity, the more it sloshes around, and it could cause enormous asset bubbles like what we had with the Chinese stock market, where I think for 8 days the Chinese stock market was on fire and the regulators in China were really worried about that. Or what I think worries the people in the Chinese government and the regulators even more is the stagflation. So higher food prices, higher rent to rent an apartment, or for stores, rent for stores, because there's a lot of videos of people protesting, but the price of rent. But the Chinese government is dealing with a lot of problems right now. So you have Hong Kong, you have the Three Gorges Dam, you have the Chinese economy, you have the trade deal, you have all these different problems that the Chinese government is trying to deal with. It's a lot. And then also, they're trying to manage the perception of things here in the West. Notice that the Western media did not cover any of the problems with the Three Gorges Dam. You had to go online on YouTube to China in Focus to find out anything, or China Uncensored to find, or NTD News to find anything at all about what's been happening with the Three Gorges Dam and the record amounts of flooding and rain in China and the other natural disasters. And bridges collapsing from the flooding, and there's a lot of craziness. Authorities have more than 3,000 banks to oversee, most of which are small rural entities without ready access to capital. In another unprecedented move, China now plans to allow local governments to use their 200 billion yuan from bond sales to help smaller banks replenish their capital. Okay, so the local governments are helping the banks, but what they don't mention here is that the local governments have these local government financing vehicles or dummy companies set up, and the banks are the ones who loan them. They loan these dummy companies loans that the local governments can't pay back. So you have like a shell game. It's a shell game here of local governments claiming to bail out the banks when the banks are the ones that gave all these local governments loans that they knew they couldn't pay back because they were expecting bailouts from Beijing. The industry, meanwhile, the currency, China's currency, their exchange rate, is looking actually strong, but that's because it's really manipulated. So it hasn't had that big devaluation like Tavi Costa or Kyle Bass or others have predicted yet. The exchange rate is still, it's right around 7. It's a little bit below 7 at 6.989 Chinese yuan to the dollar right now, but that's because they run a very similar manipulation system with their currency to what Jim Willie has talked about with what he expects to go with the dollar. See, China's already been running that. Now, China issues press releases saying that they're going to internationalize the yuan, but the reality is exact opposite. Inside China, they print unlimited. And then the People's Bank of China and the Chinese banks manipulate the foreign currency exchange rate to whatever they want. They spend a lot of resources manipulating the exchange rate. If you talk to, I interviewed a number of China experts over the last 18 months about this. I haven't interviewed Kyle Bass yet about this, but he's spoken a lot publicly about this, as well as many other experts, like Brian McCarthy. I interviewed Brian McCarthy about the China's currency a couple months ago. You can go back and look in the archives. The industry overall, the banking industry in China overall may suffer an 8 trillion yuan increase in bad debt this year, S&P Global has estimated. Small banks are facing a 349 billion shortfall in capital, according to an analysis by UBS Group AG, putting that figure at only 50 billion. The regulator said the shortfall could mean slower profit growth or even sliding profits at some institutions. I don't trust Chinese accounting, so whatever they're saying in public, it's probably much worse in private. Corporate bonds are also suffering, adding further pressure on banks. About 80 billion yuan worth of Chinese bonds defaulted on and offshore so far this year, the most in at least 3 years, according to data compiled by Bloomberg. And a lot of those bonds were from dollar-denominated debt bonds, which adds to the... Let's see here. Adds to the... Not speculation. Strengthens the case. There we go. Strengthens the case that China has a very serious dollar shortage. Squashing rumors section in the most recent episodes, authorities stepped in last month to halt bank runs at 2 local lenders in Hebei and Shaanxi. On July 11th, savers rushed to withdraw money from Hengshui Bank, also based in Hebei, before the police put a stop to it. In response, the local offices of the People's Bank of China and the CBIRC, I guess that's the banking regulator, said in a joint statement that Hengshui Bank and its branches are legitimate financial entities where any savings under 500,000 yuan are protected under China's deposit insurance regulation. They reassured depositors that their money is safe and urged them not to, quote, blindly withdraw savings. Police took people into custody, issuing reprimands to those spreading false rumors, according to the statement. Hengshui Bank said in an emailed reply on Wednesday that the city government is actively dealing with the issue and called for less publicity for fear the incident leads to regional systemic risks. More broadly, regulators have been working on a plan since last year that would see small banks merge to shore up their strength. Merging 2 bad banks together doesn't fix anything. But so far, little of that effort has come to fruition. Investors were spooked last year when authorities seized Inner Mongolia-based Baoshan Bank in the first state bank takeover since 1998. They have since engineered rescues by having state-run entities inject capital into other struggling lenders, such as Bank of Jinzhou. Quote, China has too many banks, said Zhang, the expert that was interviewed for this article. Quite a few of them are weak in corporate governance and earnings capacity, also fraud and accounting fraud. All types of fraud and accounting fraud. If you listen to China in Focus, there's even a scandal, I think, now with one of China's largest agricultural companies, maybe their largest state-owned enterprise agricultural company, with moldy corn. They've been literally sandbagging a bunch of corn, and they sold customers just absolutely unfit to eat corn. Sounds like a scam. For more information, go and watch the China in Focus episodes of the last week. A better option is to take a more proactive approach to restructuring those regional banks. Okay, please tap or smash the like button. Almost to 400 people watching this live stream show and under 100 likes. But thank you to the people who did hit the like button. I appreciate it. One super chat from Abbey Road. Thank you for the super chat. Did I watch Princes of the Yen documentary? Do I agree with its thesis? I did watch Princes of the Yen documentary years ago, and no, I do not agree with its thesis because it sounds like a ripoff, like a bastardization of what Ludwig von Mises and Murray Rothbard have been talking about for decades. So he's really late to the party. Austrian School of Economics and libertarians have been warning about central banks and governments for way longer, before that guy was born. So for someone to make a documentary and say how evil central banks are, and then everyone's like, oh my God, he's the main authority. And it's like, no, Ludwig von Mises has been warning people about this for literally almost 100 years. His writings have been out there for 100 years. Murray Rothbard has been warning people way longer than Princes of the Yen. The Austrian school, most people just rip things off from the Austrian School of Economics. There you go, that's the truth. Most of the best mainstream thought was stolen from the Austrian school. So I would be careful about trusting these gurus or experts, because I've heard that guy cited a lot, and Ludwig von Mises, he's no Ludwig von, he is a smart guy, but he is no Ludwig von Mises. Let's just put it that way. Or Murray Rothbard. Austrian School of Economics and libertarians were warning about governments and warning about central banks for decades, and no one listened. And now, oh, it's Princes of the Yen documentary. It's just like in basketball with this Euro step, right? Everyone's talking about the Euro step. There was NBA greats like I think like Elgin Baylor and others doing it like 40, 50 years sooner. If you want to understand how the system works, Ludwig von Mises is one of the best. Murray Rothbard too. Okay, well, I think that's it for this short little live stream show. I'm going to put all the articles. So if you want to read Kyle Bass's tweets about this, his entire tweet thread, it'll be below the video in the information and description section. There will be a link to it, along with some of these other articles. So lastly, before I wrap things up, what could be the fallout? Again, my thesis on this is that HSBC Bank, if the Chinese economy has more problems, if Chinese real estate or Hong Kong real estate has more problems, if the Hong Kong dollar has problems, all these things are going to affect HSBC Bank the most. I was actually speaking with Direct Messages and Kyle Bass earlier today, and he said the assets that HSBC Bank are of much lower quality than anyone thinks. And he's been saying this for a year now, and the HSBC stock has been just slipping. He said this on an interview on Yahoo Finance maybe a year ago, and they totally ignored what he said. He was warning people about HSBC Bank and all the executives leaving, and the stock price was going to have problems, and they just ignored what he said. So HSBC Bank, the collateral damage from problems in the Chinese economy, Chinese banking system, HSBC Bank, and then potentially a fall in commodity prices again with some of these industrial metals and maybe energy prices, depending upon how energy demand goes for the rest of the world here in the US. So the copper price has rallied enormously. I have not seen a lot of fundamental case for the copper price rallying that much, so I could see the copper price rolling right back over. 6 months from now, the copper price could be crashing again. Perhaps. We'll see. I mean, if they're going to... the central banks are going to create enough currency units, then maybe commodity prices will rally more. But the supply-demand fundamentals for something like copper, I just don't see it right now. But normally, China is, in my opinion, China is the copper market. A lot of people don't talk about that. And when they decide they want to stockpile copper, the copper price either stays strong, or if China thinks the copper price is cheap and they start stockpiling copper, you get a big move in the copper price chart, a big rally like what has happened since March 23rd. Okay, last super chat here before I close it down. Okay, Dominique Nieto, thank you for the super chat. What do I think of Alistair McLeod's call for end of fiat currency by the end of this year? What proof does he have? I mean, given his track record of some of his calls of silver price and the other stuff, I would take it with a grain of salt. What proof does he have that fiat currency is over? In fact, the press releases I'm seeing is that all these governments, whether it's China and others, Bank of England's talking about this, there's new press releases, they want to go to a government cryptocurrency. So I don't know if that would count. I don't know if he would call himself correct on that. Look, if you want sound money, limited government, limited or no government, more free market capitalism, more free speech, more freedom, things are going the opposite direction, okay? Things are going in the George Orwell 1984, actually worse in that direction. I hope I'm wrong, but none of the evidence I've seen the last 6 months looks like I'm wrong. So the elites are still issuing, they're still moving things along. The US is still moving things along slower than China with a crypto dollar or digital dollar, whatever they want to call it. Fed coin. So there's same size or larger government, more control over the economy, stagflate and tax and lie. We could see the U.S. do some type of dollar devaluation. I think the weakness in the dollar, my educated guess, I said this yesterday or the day before, my educated guess why the dollar is showing weakness, let me see if I have the Yahoo Finance up. I think it was barely, the dollar index was barely at 96. Yeah, it's barely at 96. It's at 96.05. And meanwhile, the last 3 or 4 weeks, the Fed is claiming that their official balance sheet has dropped a lot, that their official balance sheet is down 250 billion. So normally in the past, when the Fed's balance sheet is falling, the dollar is getting stronger. Also at US Treasury auctions, you have a lot of foreigners buying treasuries, which would normally mean that there's some demand. There's more demand for dollars in treasuries, that the global economy is starting to function a little bit again, that there's some global trade, because normally when foreigners are buying treasuries, they're taking dollars and recycling them from global trade back into treasuries. So for the dollar to be this weak, something's going on behind the scenes that we don't know yet. That's my educated guess. There's something we don't know. Maybe in the next couple weeks, we're going to find out that the Fed's balance sheet really wasn't contracting as much as they claim. And maybe it grew by 500 billion or trillion. I don't know. Something like that. Who knows anymore? This is why some guy was saying, what's the big deal? Some troll was like, what's the big deal in auditing the Fed? Well, I would prefer transparency in government, and I would prefer a lot smaller government. They shouldn't decide arbitrarily that they're going to randomly increase the balance sheet by $500 billion or $1 trillion and not tell anyone. Or trillions, like what happened in 2008 and 2009. They arbitrarily decided in 2008 and 2009 to save the system with tens of trillions in commitments. And then, as Ron Paul said in the interviews that I did in 3 or 4 years ago, they tried to pull all the liquidity out quickly to prevent massive inflation. Okay, well, that's it for tonight's show. Thanks, everyone, for listening. There is a new article on Mavericks Metals behind the Patreon account paywall. I am working on the oil article. I did a little bit of work a couple days ago for an hour or so, and I am working on another update about the S&P 500, another article. So I am working on a lot. There is over 100 pieces of unique content behind the paywall on Patreon for only $5 a month. Lots of articles on royalty and streaming companies. There's one large one on uranium. There's a lot of them on different gold miners. There's a lot of them on the oil market. I'm working on the oil update. Hopefully I'll have that out by the end of this weekend. So there is a lot of content for only $5 a month. I think it's probably the best deal anywhere. If you want to improve your game, if you want to learn how professionals do research and see what I see with the research, information, content, analysis. Okay, everyone. Thank you very much for listening.